Right now, shares of Datavault AI, ticker DVLT, are trading at $1.40, which is up about 2.9% on the day. And right there is the perfect trap. That little green number is what catches so many investors. You see a stock, especially one with AI in its name, trading for under $2, and you see it moving up, and the immediate thought is, this is it. This is the bottom. The expectation is that you found a hidden gem, a microcap that's about to explode, maybe the next Nvidia stock before anyone else caught on. You might be logging into your Robinhood app or your SoFi Invest account, thinking this is an easy double. But the reality of what's happening under the hood with Datavault AI is so much more complicated, and frankly, so much more dangerous than that small green percentage implies. This 3% bump today is statistical noise. It's a tiny wave in an ocean of red. Let's pull back the chart just for a week. This stock has been in an absolute free fall. We're talking a drop of over 38% in the last week alone. Just 2 days ago, the stock plunged over 10% in a single session. So this $1.40 price isn't a launch pad. For many, it's the wreckage of what used to be a much larger position. The expectation is that you're buying the dip. The reality is that you might be buying into a complete structural collapse. The volume is another key. This isn't some ignored sleepy stock. The average volume is massive, often exceeding 80 million or 90 million shares. Today is no exception, with over 16 million shares traded before 10:30 a.m. Eastern Time. This isn't long-term investing. This is a battlefield. This is a trader's stock, being passed back and forth on platforms like the Fidelity trading platform or Interactive Brokers by people trying to scalp pennies. It's a hot potato, and the volume tells you that. So what is the story everyone is telling themselves? The narrative is that DVLT is a Web 3.0 and artificial intelligence company. The name itself, Datavault AI, screams future. The company, which you might remember used to be called WISA Technologies, talks about data visualization, monetization, and valuation. All this sounds fantastic. It sounds like a pure play on the new economy. This narrative has been supercharged by a flurry of recent press releases. They just announced a $10 million licensing agreement with Scilex Holding Company. They've partnered with a comedy club, of all things, Rodney's Comedy Club, to use their Verify You platform and something called a joke token. They've also got deals with Wellgistics Health for prescription drug tracking and NF Hits for music distribution. From a distance, this looks like a company firing on all cylinders, making deals and building a foundation. This is what fuels the talk on forums, the speculation about a short squeeze. And the short interest is high, with a significant portion of the float being shorted. This creates a coiled spring, where any good news could, in theory, send the stock flying. But then we have to contrast that expectation with the reality of the fundamentals and the company's recent actions. The financial picture is not just bad, it's alarming. The company is deeply, deeply unprofitable. In their last report, they posted a negative EPS of negative $0.54. The net profit margin isn't just negative, it's negative 1,300%. That is a staggering figure. It means the company is burning through piles of cash just to keep the lights on. And speaking of cash, their cash and short-term investments are down almost 90%. This is the real ticking clock. It doesn't matter how great your joke token idea is if you run out of cash. This isn't a stock for a stable Fidelity wealth management portfolio or something you'd find in Fidelity mutual funds. This is the opposite of a blue-chip Apple stock or a growth vehicle, Tesla stock. This is pure speculation. While the company is signing all these new deals, they also just terminated a major one. Just a few days ago, it was announced they were ending their agreement to acquire API Media Innovations. This was a significant deal, and its quiet termination is a massive red flag that the market clearly noticed, given the 38% drop. Why did it fall apart? We don't have a clear answer. And what about the insiders? Are they buying this dip? Are they loading the boat? No. Recent filings show insiders are selling. The CEO has sold shares. Another high-level insider, Brett Moyer, sold over 130,000 shares. When the people who run the company are selling stock even as it's collapsing while simultaneously putting out press releases about new partnerships, you have to ask yourself what they see that you don't. This isn't the kind of stock you put in your Fidelity IRAs for retirement. This is the kind of stock that many people who are new to self-investing get burned on because they look at investing sites and see a low price and a hot sector, but they don't look at the cash flow statement or the insider transactions. They're doing Robinhood stock trading based on hype, not on health. Let's talk about what the company actually does. The expectation is AI. The reality is a collection of software platforms. VerifyU is for digital credentialing. ADIO is a data over sound technology. They license high-performance computing software. These could be valuable. The problem is that they are in hyper-competitive fields and are costing a fortune to develop, while revenue is still tiny, just $1.74 million in the last quarter. That's a pittance for a company that, until recently, had a market cap in the hundreds of millions. The analyst ratings reflect this confusion. There's a moderate buy consensus out there with an average price target of $7. That $7 is the expectation. The $1.40 is the reality. One analyst, Weiss Ratings, has a simple sell rating. That's a huge disconnect. So, how do you trade this? If you are a day trader with an advanced Interactive Brokers account using the full Interactive Brokers platform to watch Level 2 data, maybe you can trade the volatility. Maybe you're hoping for that short squeeze. But if you are an investor, if you are building wealth, this is a different story. This is not a candidate for a robo-advisor like Schwab Intelligent Portfolios or SoFi Robo-Advisor, which are designed to build diversified, long-term positions using things like Fidelity ETFs or SoFi ETFs. This is a lottery ticket. The bull case is that one of these new deals, like the $10 million Scilex one, is the start of a real revenue stream, that they can survive the cash burn, and that the short sellers will be forced to cover sending the stock back to $3, $4, or even that $7 target. The bear case is that the company is running out of cash, the terminated deal is a sign of internal problems, the insider selling is the ultimate warning, and these new press releases are just attempts to keep the stock alive long enough to raise more cash, which would dilute current shareholders even further. I want to know what you think. This is a stock that divides the market. Comment below if you believe Datavault AI is a genuine turnaround story or just a speculative trap. When you look at a stock like DVLT, it forces you to reevaluate your strategy. Are you looking for investment help? Are you trying to invest online for the long term? If so, your individual brokerage account at a place like Fidelity or SoFi should be focused on quality. Your SoFi investing strategy should be different from your trading strategy. You use the Fidelity mobile app to check on your Fidelity brokerage account, which holds your future, not to nervously watch a 10% daily swing on a penny stock. The rise of online investment and platforms like Robinhood and its Robinhood Investments or Robinhood crypto offerings has made online investing accessible, but it has also made speculation easier. There's a difference between SoFi stocks and a SoFi trading platform built for active moves, and an intelligent portfolio built for stability. Interactive Brokers stock trading is for professionals for a reason. Interactive Brokers fees are structured for active, high-volume users, not for someone making one trade and hoping. So, to wrap up on Datavault AI, the expectation is that you're getting in on the ground floor of an AI and Web 3.0 company that's making deals and is primed for a short squeeze. The reality is that you are looking at a company with a severe cash burn problem, baffling negative profit margins, a recently terminated major acquisition, and insiders who are selling their shares. The small 3% gain today is meaningless against that backdrop. The real story here isn't the AI potential, it's a race for survival. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.